On June 4th, Brown-Forman just dropped their fiscal year results, and it's a mixed bag. They pulled in $3.9 billion in net sales, which actually beat their own predictions, even though overall sales dipped 1% from the year before. When you strip out all the noise like acquisitions and currency shifts, their organic net sales stayed pretty much flat. The fourth quarter itself looked a bit better, with net sales hitting $912 million, a 2% increase. That beat what the analysts were expecting, so that's a win. But on the flip side, their earnings per share took a serious hit, down 17% for the full year to $1.53. A big chunk of that earnings drop came from higher selling, general, and administrative expenses, plus some non-cash charges related to intangible assets that really squeezed their fourth quarter earnings, which fell 62%. The company pointed to the end of a distribution deal for Korbel Champagne and the absence of a previous agreement for their Sonoma-Cutrer wine as reasons for the sales dip, though the new Jack Daniel's Tennessee Blackberry launch helped a little. Emerging markets were a bright spot, with 12% organic growth, especially in places like Türkiye and Brazil. However, their tequila brands, Herradura and El Jimador, saw sales decline. On the upside, their ready-to-drink portfolio, particularly New Mix, jumped significantly, driven by gains in Mexico and a U.S. launch. Looking ahead, Brown-Forman is bracing for more market ups and downs. They're forecasting organic net sales to be flat for the next fiscal year, with operating income potentially dropping 3 to 5%. They're citing economic pressures and global instability as key concerns. Despite the challenges, their stock saw a 3% bump by Thursday morning. Business and finance news today, powered by AI, bringing you what moves the market. I'm Corey with the story.